The global rise in inflation is top of the agenda at the central bankers' gathering at the Bank for International Settlements annual general meeting in Basel. Sylvia Wadler is there for us in Basel. Sylvia.
Well, they've all been rushing past us already this morning to head into their meeting. I dare say keeping very stum about what might be on the agenda, but you said it already. Inflation, yes. Inflation, recession, maybe. We'll have to wait and see, of course, until the press conference. Until then, we want to mull over things with Richard Morris. Richard, thanks for stopping by here.
Morning, Sylvia.
Now that inflation is on top of the agenda is not a big surprise. Are maybe the Asians and the emerging market countries even more worried about it because of the food price scenario?
Yeah, I think the problem is that they've got this catch with food prices that just keep running up, and if you look at the Asian markets now, they're starting to take off all these subsidies, which are particularly for the oil prices and for energy prices, which is now creating a bit more inflationary pressure for the food prices and just purely transportation costs. So I think this is one of the things that they're really starting to get real problems with, and particularly it's affecting the Asia region. And I think it's also something that we're seeing in Europe as well, where at least the ECB are actually reacting to it and are the ones that are being sensible. Certainly when we looked at the Bank of England response, that they seem to feel rather like the Fed in their statement post the FOMC. They believe that inflation is actually going to tail off come the year end, and I'm afraid I can't see that one at all. I think we haven't seen second round effects yet, but the pressures are growing all the time, and I think it will be coming out of the public sector rather than the private sector that we'll start seeing it. But certainly there are a few companies now starting to tweak up. I thought I saw Michelin going to charge more for their aeroplane tyres. There is going to be starting to be passed along to the consumer, increasing prices, and I think the second round effects are already starting to bite in now.
I think there's been a lot of whistling in the woods so far about kidding themselves that second round effects are only a danger but are not happening yet. They are happening. Yeah. The other story that is happening is clearly a currency story. Yeah. There's been a lot of romantic ideas that the dollar will start regaining strength. I've been arguing with many for a long time that on the structural side the euro will be well supported. Now we hear a lot of vibes about unpegging from the dollar and pegging towards a euro or a euro something basket. What are you hearing?
Yeah, I was listening to that one last night. We actually heard a conversation in which they were talking about dropping a dollar peg. It's an Eastern European region, so they were talking about dropping the dollar peg, move to euro. Their only concern with that part of it was that the euro is already at an elevated high, and would they be just dropping themselves into another currency that will back off? So there was an argument was euro, Swiss franc, and find some sort of balance. But certainly this is a trip back into sort of Bretton Woods and gold standard in 31 and 71, and we're closing up to 2011 on the 40-year cycle, and a breaking of these soft pegs is probably a likelihood. But when it happened in 31 and 71, the US dollar got killed by another 36-37% post the breaking of the pegs, and I can see that as a real issue going forward. The US dollar, as far as I can see it, is going to really face a lot of traumas coming forward. It's far from resolved. I think the euro is the big story, which has got a lot of the upside potential. There's a lot of flows coming in there, and I think that we're talking about 168, 169 for coming up for the end of July, August, and we actually passed a very significant date on the 4th of July, which could see the euro accelerate very quickly on the technical side of it as well. But certainly upside is there for the euro side of it.
Certainly, on the pegging story, there's a lot that's going to hit us. Gulf Cooperation Council, the Russians, the Chinese, a lot of them are talking about it. The knock-on effects, apart from the currency, of course, the real kibosh could come for the U.S. bond market. It's getting increasingly difficult. Everybody's already up to their eyeballs in U.S. bonds. Yeah. Are we going to get there again like in the 80s with every U.S. Treasury auction? We're going to sit there and say, will the foreigners still buy?
Yeah, I think we're getting very close to that. I mean, if we actually look at some of the Bund auctions recently, we've been starting to see tails developing for the first time on those, and I think the US, particularly with these low interest rates, are going to find it harder and harder to get their paper away. I mean, Hank Paulson's going to have a devil's own job going around and trying to flog this stuff. because it's very, very difficult, and I think in the current environment it's going to get a lot harder for them. I think that America in particular is got a huge problem coming forward. Our view of it is that America will be forced to raise interest rates very dramatically post the election period, and a lot of that's to do with the financing for the twin deficits, and I think they're going to find that is going to be one of the biggest drivers to them, and it won't be inflation that they'll react to. It will be finally we can't do the debt refinancing. It's a crisis, I'm afraid.
Yes, and I dare say we'll be talking about whether the proactive stance of the so-called proactive stance of the Fed is that much better than the not so proactive stance of the ECB. We've got to leave it there, Richard.
Okay,
thanks a lot. Richard Morris from our investments. That's it from us here for the time being. Back to you.
Sylvia, thank you so much for that.